Europe, home to the fintech capital of the world and some of the most established real-time payment systems globally. Yet despite real-time's solid foundation and Europe's rich history of banking expertise and fintech innovation, real-time payments penetration is now growing at a much faster pace elsewhere in the world, in part thanks to well-established digital overlay services available in other markets. Is real-time adoption slowing down here? What needs to happen for real-time payments to reach the dizzying heights seen elsewhere across the world?
Customers are not expecting to pay for these kind of services.
Banks haven't been driving real-time payment adoption because they frankly don't see a business case for it.
Fortunately, the wheels are in motion to see a new wave of growth in Europe. The market for digital payments is evolving. EU Commission directives, cross-border initiatives, and open banking innovations are just around the corner. Large parts of Europe have already established real-time payment infrastructure and saw a wave of growth which has now slowed down across the continent. Compared to hotspots such as Latin America and Southeast Asia, the growth trajectory for real-time payments in Europe is sturdy, yet less pronounced.
As a region, Europe is one of the more established real-time payments markets in terms of its development and rollout, but it is also one of the markets in which we've seen the least penetration overall. Some of the markets that adopted later and had sort of faster rollouts have seen much greater share develop, whereas in Europe, real-time payments make up less than 10% share of the overall payments mix. Biggest market in the region is the UK, which is the European leader for instant payment volume, as well as mobile wallet transactions actually. It's the oldest system in Europe in terms of real-time payments and has the lowest expected growth rate over the next 5 years. So we're kind of looking at this market as being pretty much saturated. There's going to need to be some sort of push to get it to go further. Compound annual growth rate, 9.1% over the next 5 years. Most of the other markets are looking at least a double-digit compound annual growth rate, which is very impressive.
The faster payment system, Europe's first, and the UK's current real-time scheme, was launched in 2008 and has successfully been facilitating billions of transactions every year. Pay.UK, the UK's standards body for interbank payment systems, is currently working to modernize the network with the introduction of its new payments architecture, or NPA, designed to handle rising payment volumes, adopt ISO 20022 standards, lower barriers to entry, and ensure valuable overlays and services are supported across the network. On the mainland, the benefits of real-time payments have been pushed by private fintech players for years, supported by key players such as the European Central Bank and the Banking Association.
In Europe, the players driving real-time payments really vary by country, but I group them into a few areas. I think there's the regulatory, the ecosystem drivers in some markets that we see coming up with really innovative new use cases and really pushing the adoption, for example, using real time to disperse government benefits.
So I would also say that it's the fintech industry that will also be driving adoption. We've seen a number of value-added services that are being built by fintech players around the industry, and these are creating entirely new use cases and scenarios for adoption of real-time payments.
Real-time payments are a fundamental part of modern economies, and the European Union is making moves to ensure it retains its financial credentials. With banks slow to embrace real-time payments across the Eurozone, the European Commission is now making access to instant payments mandatory, effectively solidifying the position of real-time payments across the region. This includes movements to standardize schemes on ISO 20022, introduce new value-added services such as request to pay, and ensuring charges should cost no more than non-instant transfers for domestic and cross-border transactions.
When I think about who's driving the adoption of real-time payments around Europe, I think of a couple of key players. First and foremost, the regulators. The European Commission has adopted a regulation to force banks to become reachable using instant payments. And that's going to be a key driver, of course, for adoption over the next several years, in the same way that it was for SEPA roughly 10 years ago. The market infrastructures, on the other hand, haven't been doing much. They've invested a lot of money in real-time payment infrastructures and have seen sluggish adoption over the last few years, with the exception of a couple of key geographies around Europe, like the Netherlands. And what's noticeably missing here are the banks. The banks haven't been driving real-time payment adoption because they frankly don't see a business case for it. In most cases, they can't charge more. It simply increases their costs. And as a result of that, we're going to see the key drivers are really going to be the regulators and the fintechs.
Real-time payments offer a range of strategic and competitive benefits for banks, unlocking financial innovation, providing B2B support, and creating opportunity for new revenue streams in the form of overlay services. The European Commission may be making real-time payments a requirement, but the opportunity is there for banks that embrace these schemes as use cases and overlays become more developed.
So initiatives as SEPA Request to Pay as well as PSD3 can accelerate the adoption of instant payments. This because banks will offer services with great user experience that actually include those kind of initiatives on their customer journey. So new initiatives like Request to Pay will definitely help corporates for launching new services to their clients. Request to Pay has the possibility to carry on more data, so data about remittances, data about invoicing. So this kind of information is key for the new services for corporate clients.
European financial bodies are also working at solving the challenge of enabling real-time payments across borders. With a single currency area and central bank covering a large portion of Europe, the continent faces less cross-border challenges faced by other parts of the world. Yet, with limited uptake to date for the pan-EU SEPA Request to Pay scheme, financial bodies could benefit from looking toward the Nordics P27 scheme for inspiration.
P27 is in a market where we're already seeing quite strong adoption of real-time payments for the European region. Denmark and Sweden, for example, are top 3 in Europe for real-time payments share of electronic payments, with 13% share in Denmark of all payments being by volume real-time, and Sweden, that figure is 16%. The launch of pan-regional, so interoperable real-time payments within the Nordics is likely to further accelerate that growth development and move these markets into a place where not only are you making real-time payments domestically for your transfers to individuals and to businesses, but also for payments across the region. For the markets where we're looking at, we're not seeing the adoption that we are in some of the Nordic markets. So France and Germany, for example, two of the bigger and more prominent markets in the FCTN scheme, they're expected to grow well as the scheme ramps up in the forecast period, with France and Germany recording both double-digit compound annual growth rates. France in particular, a very high 47.8% forecast compound annual growth rate there. But the real-time payments share of total electronic payments, if you put it in context, this is looking like 3 or 5% by 2027 for these markets. So nowhere near the level of penetration that we see in the Nordics.
From my perspective, I think real-time payments is one of those classic waves of innovation. Real-time will wash away, this wave will wash away a lot of the legacy, slow bank payments and batch over time. I think the question is how quickly that will happen. Particularly in a market where Europe, where some of those legacy solutions are very effective and very well established.